If you own XRP or you're thinking about investing, stop for a minute. Because most people holding this coin right now are making mistakes they don't even realize. They're not losing because XRP is bad. They're losing because they don't understand what they own, how to hold it, or how to react when the market moves. This is crypto equation, and today we're breaking down the biggest XRP investor mistakes and how to avoid them so your strategy survives when everyone else's falls apart. Because as Warren Buffett once said, risk comes from not knowing what you're doing. And in crypto, that single quote explains more failure than any chart ever could. Let's start with what's real. As of October 2025, XRP trades just under $3, hovering between $280 and $290. The market has been calm for weeks. That silence makes people restless, and restlessness breeds mistakes. The truth is, XRP is sitting in one of the most interesting positions it's had in years. The SEC settlement finally gave the market the clarity it needed. Ripple paid its fine, appeals were dropped, and the ruling that XRP isn't a security in secondary market trading still stands. For the first time in half a decade, institutions can hold, trade, and even consider fund products tied to XRP without walking into legal gray areas. And yet, even with that clarity, most investors are still sabotaging themselves. Let's break down how, and more importantly, how not to. The first mistake is treating XRP like a lottery ticket instead of a long-term asset. Crypto has trained people to expect miracles overnight. They see a new coin go 20x and think XRP owes them the same tomorrow. But XRP isn't a meme token, it's infrastructure. It moves value, not headlines. When you treat it like a scratch-off ticket, you'll sell the moment the market dips. And that's exactly when professionals are accumulating. The patient investors, the ones who held through the quiet years, are the ones positioned for the big returns later. Everyone else chases noise, sells early, and complains that XRP never moves. Warren Buffett wasn't talking about crypto when he said, risk comes from not knowing what you're doing, but the message fits perfectly. If you don't know what you own, every price fluctuation feels like danger. If you understand the mission, fast, compliant, institutional payments, then volatility becomes opportunity. The second mistake, ignoring the fundamentals while worshiping price. So many traders stare at the chart but never read the updates. They miss the fact that the XRPL EVM sidechain is live, meaning XRP now supports Ethereum-style smart contracts. That single upgrade opens doors to tokenization, DeFi, and interoperability. They ignore the ETF filings sitting at the SEC from Franklin Templeton and other major asset managers. Those filings haven't been approved yet, but they haven't been rejected either. They miss Ripple's continued partnerships with global banks and remittance companies. Those partnerships don't show up on a chart. They show up later in adoption. If you only measure success in price today, you'll miss the structural progress that drives price tomorrow. Smart investors track fundamentals as closely as price. They understand why XRP could rise, not just that it might. The third mistake, overexposure and poor risk management. People fall in love with their coins. They think conviction means putting every dollar into one bet. It doesn't. Conviction without balance is how portfolios die. $2,000, $5,000, whatever your number is, should be sized for your life, not your fantasies. You can believe in XRP's long-term potential and still diversify. You can hold it alongside Bitcoin, stablecoins, or traditional assets. That balance keeps you calm when volatility hits. Because here's the truth, you'll never make rational decisions in panic mode. If you overinvest, every red candle feels personal. That emotional stress forces bad decisions. Panic sells, revenge trades, impulsive buys. Professional investors never risk more than they can emotionally and financially handle. That's not fear, that's discipline. Mistake number 4, trusting exchanges with long-term holdings. We've seen what happens when platforms collapse. Funds frozen, withdrawals halted, investors helpless. If your XRP is sitting on an exchange, it isn't really yours. Custody matters. Use hardware wallets, backup seed phrases, double your security layers. You don't need to be paranoid, but you do need to be prepared. The best investors spend more time securing assets than predicting prices. Mistake 5, trying to trade every move. Crypto influencers make it look easy. Buy low, sell high, repeat. But markets are designed to shake traders out. Every big move begins with fake breakouts, sudden dips, and emotional manipulation. Most traders lose not because they're wrong about direction, but because they underestimate how much patience the market demands. There's an old rule in investing. Time in the market beats timing the market. That rule applies double in crypto. If you believe XRP has long-term potential, legal clarity, institutional interest, expanding technology, then short-term fluctuations are noise. Build your position methodically. Add on weakness. Hold through boredom. That's how you capture asymmetric gains. Another common mistake, failing to plan an exit. People say they'll sell when it moons, but when it does, greed takes over. They hold too long, expecting more, and watch profits evaporate. Set realistic checkpoints. Maybe you take a third off at $6 and another at $10 and let the rest ride. Write those levels down now before emotion gets involved. Having an exit plan doesn't mean you lack faith. It means you understand cycles. Every bull market eventually cools. Locking profits is how investors survive to play the next one. One of the biggest mistakes of all, not keeping up with regulation and macro context. Crypto doesn't move in a vacuum. When interest rates drop, risk appetite rises. When liquidity tightens, everything feels heavy. Right now, the Federal Reserve is signaling gradual rate cuts through 2026. That's positive for risk assets like XRP. But if inflation spikes again, policy could reverse, and the market will react fast. Stay informed. Read the news, not just the headlines. The more you understand the environment, the less surprised you'll be when prices shift. Remember Buffett's words again. Risk comes from not knowing what you're doing. Knowing what you're doing means knowing where you are in the cycle. Another mistake that costs investors dearly, confusing conviction with stubbornness. Conviction means you've done your research and believe in your thesis. Stubbornness means you ignore new information that contradicts it. If Ripple's business model changes, or regulation shifts drastically, you need to adapt. Blind loyalty to any asset, even one as strong as XRP, is dangerous. The smartest investors evolve. They update their beliefs as new data comes in. That's not weakness, it's wisdom. Then there's the impatience trap. XRP has been consolidating for months, and people are frustrated. They forget how long adoption takes. Think about traditional markets. It took Amazon nearly a decade to break, even after going public. It took Tesla years of doubt before turning profitable. Technological revolutions happen slowly, then all at once. If you expect instant wealth, you'll sell the week before it starts. Patience isn't passive. It's an active decision to wait for alignment. Finally, the mistake that underlies all others, not having a plan. Most people buy XRP because someone on YouTube told them to. They don't know their entry levels, exit points, or goals. Without a plan, every dip feels catastrophic and every rally feels like the top. A plan gives you confidence. It turns chaos into structure. Here's what a basic plan looks like. You allocate what you can afford to hold long term. You store it safely. You set alerts for major catalysts, ETF approvals, Ripple partnerships, network upgrades. You review quarterly, not hourly. That's how real investors operate. Let's zoom out for perspective. XRP has been written off more times than anyone can count. In 2017, it was called a bank coin that would never moon. In 2020, it was called a regulatory nightmare. And yet, here it stands in 2025, trading freely, powering settlements, and evolving into a smart contract platform. Every cycle, it sheds doubters and builds believers. If you avoid the mistakes we've talked about, emotional trading, overexposure, poor security, lack of research, and impatience, you'll already be ahead of most of the market. Because in crypto, survival is victory. The ones still standing after the chaos are the ones who collect the rewards. Let's recap the philosophy. Warren Buffett said, "Risk comes from not knowing what you're doing." In XRP, that means understanding the fundamentals, the legal clarity, the technology, and your own psychology. It means knowing why you hold, what you expect, and how you'll act when conditions change. If you master those, volatility stops being scary. It becomes strategic. The investors who win aren't the luckiest or the loudest. They're the ones who did the boring work when everyone else was chasing noise. They're the ones who had a plan when others panicked. If you can do that, if you can treat this like an investor and not a gambler, your odds of success multiply. You don't have to be a genius. You just have to be prepared, patient, and informed. That's the real formula. If this video gave you clarity, subscribe to Crypto Equation, where we turn complex markets into simple, actionable insights. Like the video if you found value, and share the mistake you've made in the past with XRP in the comments below. Remember, knowledge doesn't eliminate risk, it manages it. And as Buffett taught us, the only real danger is not knowing what you're doing. This is Crypto Equation. See you in the next one.